Hey, everybody. Thanks again for tuning in to another edition of What's Going On in the Market. I'm Josh Brenner, and today I've got a special guest with me. He's my trusted mortgage advisor and lender, Brian Farwell. And today we're going to talk about what's going on with interest rates because there's a lot of chatter about that. And Brian, what has the market been like in the last 30 days with interest rates?
Yeah, well, first of all, thanks for having me on, Josh. Love getting these updates every week and glad to be a part of it this week.
Thank
The
you.
market's been crazy. We've seen that not just even in the lending world, right, but in the real estate world as well. But from a lending perspective, I mean, rates have just held super low, historical lows out there, which has for a couple months now caused a wave of refinances. But what we've seen is with the rates being low and now the market being on fire uh, in a good way, the purchase business has come as well. So the volume for all lenders is at an all-time high. We're seeing that, which is a really good thing, but it's definitely pressing certain lenders in the industry on delivery times and service and things like that. So it's a real challenge that we're kind of wading through to figure out kind of how to best continue to serve our clients with the amount of volume that's out there.
Wow. That makes a lot of sense. Also, how are lenders managing those purchases versus the refinances?
Yeah, that's a good question. It's always so delicate, right? Because the purchase business is the business or the loans that have pretty strict deadlines, contingencies, escrow dates. So I really can only speak for us at Capstone to say we're prioritizing those purchases. So we're still doing 30-day escrows, normal contingency times. We're trying to take care of our refinance clients, absolutely, but the purchase clients are going to the top of the line when they get into the system so that we can meet all their deadlines. In fact, last week, had 2 purchases, 30-day escrows. We closed in about 25 days. So when we're ready to close, we're going to let you guys know. And we are still having early close times despite the volume that's out there.
Well, that's fantastic news, especially since we have a deal going together right now with a buyer.
Exactly. So maybe we'll close that one early too.
Yeah, that'll be great. She'll be super happy to hear that. And are there any issues arising out of the amount of refinances versus purchases? But you just said you guys are getting them to the top. The purchases are going.
Yeah, we're getting them to the top. I think the 2 kind of things that I would just put on everyone's radar, and for agents, for buyers, for everyone that's kind of writing contracts, is number one, a lot of people are asking to shorten contingencies. And while the 30-day escrow works, the shorter contingencies starts to get a little bit hairy because there's a lot of things that have to happen with outside agencies, outside companies, outside vendors, like appraisals, contacting the IRS, different things like that. That sounds scary, but it's not. But those are out of a lot of people's control. And so there are some delays there sometimes. So the order appraisals, for example, right away, it may take 5, 7, 10 days to kind of go through that appraisal process. So I would say the one thing is you want to make a strong offer. You want to be fully pre-approved. That's going to help you stand out in this market.
Yeah, I agree.
And allow you to not have to go do something insane like a 7-day appraisal contingency that would put your E&D at risk.
Right.
So that, and the other big thing is just for any borrowers that are self-employed, specifically self-employed, I just say you got to update that pre-approval probably every 30 days at least, if not every 2 weeks, because the guidelines are always changing because of COVID with specifically how to look at self-employed income. And so that's just something I really talk to my clients about and stay on top of so their file is always updated.
Well, that's good to know. And that kind of leads into my next question. Are there any obstacles or delays given the current COVID climate that buyers should be aware of?
Yeah. I mean, the big one is just how we're looking at income. I mean, we have forms that we're using. We have a COVID-19 form that we're sending, which obviously we've never used previously, which is just asking clients both up front and at the very end if anything with their employment or income has changed. And that alerts us to someone's been furloughed, someone's taken a 20% reduction in their salary, things like that maybe we would be unaware of. So that is just really important to be in communication with your lender on any changes that happen, because I will say we are doing a verification of someone's employment and income usually within 2 to 4 hours of funding the loan, not 2 to 4 days like we used to, 2 to 4 hours.
Wow.
Because of how quickly it can change. So that would just be something we always want to keep on the radar.
Well, that's really interesting. And where do the experts see rates going through the end of this year, 2020? And can you give us a breakdown also of where the rates are as of today?
Yeah, for sure. So obviously no one has a crystal ball. Anyone who says they do, put me in touch with them. Oh, sorry, my video dropped out. Sorry about that. Basically, we expect rates to stay low at least through the election. And I'll tell you kind of where rates are at now. Now, there's always an eighth up or down that rates can fluctuate on a daily or weekly basis, kind of like how the stock market is constantly moving. But through the election, or up until the election, we expect it to stay low. It's hard to know what's going to happen post-election because there's so many unknowns. Who's going to be in office? What policies are going to be put in place? You know, is that instantly? Is that long-term? Things like that. And so I really, when I talk to clients, I don't go past the election because I just don't know, nor does really anyone. But up until the election, we expect to stay low. Rates right now are phenomenal. So the 30-year fixed rate, which is the majority of what we're doing, on what we call a conforming loan amount. So that's a loan below $510,000. I'm seeing rates in the 2.625 range.
That's fantastic.
That's fantastic. Once you go above 510 in the Ventura County area, you can go all the way up to $713,000. And it's still considered a conventional loan. It just has a slightly higher rate, but even that rate's around 3%.
That's amazing.
Maybe 2.875 if you have enough equity or good FICO, things like that. And the FHA and VA rates are down 2.25. So haven't gotten below 2 yet, but they are super low as well.
No.
So
what's the loan amount, the maximum loan amount on an FHA loan?
So FHA and VA, well, FHA, you can go all the way up to $713,000 as well. So you can go pretty high up there. And VA technically doesn't even have a loan limit. There may be some restrictions based on income and things like that, but you could go above 713, upwards of $1 million potentially, and still get that VA rate. So pretty awesome rates out there right now for those 30 years and even the 15 years as well.
Well, that's amazing. And then there's so much demand from buyers to get out there and buy right now. They can afford a lot. Well, cool, Brian. I really
appreciate so.
Yeah. Well, I really appreciate you coming on here and letting me ask you some tough questions.
Well, hey, you gave me some softballs so I could get them, kind of like the Dodgers, try to hit a couple home runs, start the season off well. So, love. Just so thankful for your partnership, man. I know you said you got an escrow going now. We've been able to do a couple this year and love working with you and your clients. You take awesome care of them. So thanks so much for trusting me in that way.
Well, you always give us the best service. You always meet or beat the deadlines, and your responsiveness and quick responses to my clients, it really means a lot.
Cool. So all right, man. Take care. Good luck. Talk to you guys later.
Thank you very much. Hey, thanks everybody for tuning in. And look out next week for my next video. Take care. Bye-bye. And that was Brian Farwell, by the way. Brian Farwell.